Anyway, joining us to talk more about the markets, earnings season ahead, and whether the fourth quarter will be kind to investors is Kate Moore. She's the head of thematic strategy for BlackRock's global allocation team. And Kate, I think what we've seen in earnings so far has really been a bit of a surprise. There have been so many people kind of wondering if things would fall apart, if margins would get hurt really badly. And last week was a very strong week for the markets, and it was because of what we saw in earnings.
Yeah, and just listening to what Mike said in terms of focusing on how companies are talking about their margin pressures into 2022, I mean, that is the number one thing we're focusing on as we go through this reporting season. How do we talk about labor shortages? How do we talk about broad cost pressures? How do we talk about the supply chain disruptions? But despite all of that angst we've had in regards to those three pressures, I think you're right, Becky. We've had a much better than expected beat rate for the third quarter reporting. I would caution, though, we are very early in the stages of this reporting season, though, and we have a lot more companies across a wider range of industries to report. That said, I don't ever want to bet against corporates. I mean, we may not get new margin highs every quarter forever and ever, but we've seen companies do a fantastic job of managing their costs, of pivoting their businesses, of streamlining where necessary, and really, really managing to the bottom line. I don't think this quarter is going to be different.
Kate, how much of that is because consumers have cash and they're willing to spend it, meaning that companies have pricing power, too?
Yeah, companies who have pricing power are obviously the most interesting for us at this point. We do really have conviction in both the consumer as well as the potential for corporate spend over coming quarters. You know, there's been a bit of a narrative over the last, I'd say, month or two that growth is peaking, rolling over, we need to get really concerned. We have been more constructive on that and saying, yes, maybe sort of the second derivative is coming down a little bit, the rate of change of growth. But we still are looking for a good expansion throughout next year, and consumers have incredibly healthy personal balance sheets. Households are flush with cash, as are businesses. So I think you're right, Becky, that these things are contributing to a strong revenue growth profile.
Kate, we spoke with a private company earlier this morning, an American toy company that makes all of their toys here in the United States, but they are dealing with lots of issues, too. They don't have to deal with the ports and trying to get things shipped up from overseas, but they're dealing with higher plastics costs. They're dealing with much higher labor costs. He said up about 50%, 50. And right now they're being asked to make their plans for next winter of 2022. And he thinks that those higher costs are going to remain more than a year from now. Does that concern you, or does that make you think, yeah, that's kind of what I was already anticipating?
Yeah, look, if we had had this conversation, and I think we probably did 5 or 6 months ago, you know, I would say I would have been in the camp that inflation was transitory, that a lot of the price pressures were really related to the restart of the economy following the pandemic. But now it feels like there's much sort of broader and more durable price pressures percolating across a variety of industries. So I think it's fair to think that inflation will stick around for a little bit longer. We don't think it's going to be at these levels well into next year, but prices are unlikely to come down dramatically. And the thing I'm watching the most, Becky, is really around wages. We know that wages can be very sticky. This can be more challenging for companies to navigate. So one of the things I'm listening for as we go through reporting over the next couple weeks is how companies plan to deal with those labor shortages. Are they making investments in technology and software and other systems to offset that? Or what they have to do to retain their employees, because that will tell me a lot about where margins go from here.